Hi everyone, Drini here, and welcome to my channel. It's the time of the week again for Sunday Shorts, where we do a weekly roundup of every crypto that we tracked this week. And let's begin. First and foremost, our dear old SPS. Right now, on a daily time frame, we do appear to break the upper trend line of this broadening descending channel. Are we gonna go up from here? We shall see. So looking at SPS on a 4-hourly time frame, we appear to have bottomed out right here and have broken the structure and have gone above the EMAs. So the key thing is we have to hold this particular level so that we can have a golden cross right here and we continue to the upside. So once again, I'm calling all the SPS bulls out there. Please, 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 let's get SPS going to the upside after so long. We have been on a downtrend for 37 days now, so a good uptrend from here would be nice. And let's move on. So THG. So for those of you who follow THG, remember what we said the last video. So far, we have always been extended from the EMAs. Now that we have backtested the EMAs as support and held it as support, look at where we are now. We are mooning again and are on our way to our Fibonacci target of $22. And let's move on. So for Mobox, we are still on track to our $21 target right here. However, we appear to be slowing down. What do I mean? So from a 4-hour time frame, we are starting to form what I call an ascending wedge right here. So an ascending wedge basically is a bearish structure, but only if we break down to the downside. So the way an ascending wedge works is as we go up and up, the price starts to coil up, and if we break the trend line to the downside, there are 3 key levels to account for. All the candles that have touched the wedge are your potential technical targets when it corrects to the downside. So this is the first level, which is around $6.96. The second level will be at $6.36, and the third price level will be at $6 flat. How do you invalidate a bearish ascending wedge structure? Just break out of the trend line and we continue our journey from here. Alrighty, let's move on. So we're going to cover POLIS and Atlas because POLIS and Atlas tell two different stories. Atlas, for example, on a daily time frame is already above its EMAs. So we are officially back in an uptrend, assuming of course that we continue to hold this particular structure. If we continue from here, the key price targets that we have are conservatively the 64-cent range for Atlas, or if we overextend, we will eventually reach our destination of $1.57. Meanwhile, for POLIS, we are still struggling to go above the EMAs on a daily time frame. However, on a 4-hourly time frame, we are above the EMAs. So the hope that we have is if we eventually form a golden cross right here, hold the price levels above these EMAs, and we continue to our eventual destination of $40 on a conservative level and all the way up to $88 if we start overextending once the run-up starts to take place. But again, it's very important, we have to go above the EMAs on a daily time frame first before we can start climbing these Fibonacci levels to our destination. Alrighty, let's move on. So the last time we covered AXS, I did say that we got rejected from the EMAs and we corrected to a shallower bottom right here, tried to rally past the 131.96, but unfortunately have been rejected once again. So similar to the last video, we still have the same targets. If we continue to go down from here, a good buying opportunity will remain 122.66. Why is that? Because this was the key support level that existed before. You also now have this as a potential support level, which is at 126.64. Otherwise, if you're a bit more conservative, then aim for the neckline. The neckline will provide the support that we need in order for continuation. What we want for Atlas is eventually, let's just rally past this neckline, maybe backtest the neckline as support, and once the EMAs start to creep up right here, then we go above the EMAs and continue our journey. Chain Guardians is another story of why the trend lines are important. Because remember, the last time we covered Chain Guardians, we were forming an inverse head and shoulders pattern, which is typically a bullish pattern. You have the left shoulder here, the head here, and the right shoulder. Unfortunately, it is not enough to form the pattern. We have to break the neckline before continuation to the upside. And because the neckline is slanted, the longer we take to break it, the higher price it will be. So in this case, if we break it now, it's going to be $1.50, but if we break it sometime in the future, it increases to 151, 152, 153, etc., etc. This is why trend lines are very important. For our last token, we have Alice right here. So for Alice, the last time we covered it, we were forming a cup and handle. So this is the cup and this is the handle. The neckline, once again, is very important. So break 1463, and we have a technical target of the height of the cup, which is at 1792. Look at what happened. Once we broke this trend line, or this neckline right here, look at where the price wicked before the correction and before its continuation, the technical target. This is why technical targets are important, because this sort of signifies where the short-term opportunity will be before it forms a new structure. In this case, Alice appears to just chill, rocket into space, and on our way to our current target of around $22.86, which is our short-term Fibonacci 1618 extension. And that's it. If you like my video, please like and subscribe, hit the notification bell. Also, let me know what you think in the comments. If you also have other gaming cryptos that you would like me to look at, just leave it down in the comments below and I'll look at it in the future. In the meantime, happy Sunday everyone. Take care. Bye-bye.